Good evening, and welcome to the ADMC Wednesday Educational Webinar Series. My name is Nancy Crossan, and I'm the Director of Education. Tonight's webinar is being recorded and will be sent to you within a week. If you have any questions, please type them in the message box, and Rick will answer them intermittently. Tonight, it is my pleasure to introduce our very own member, Rick Willeford. Rick was one of the first dental CPAs over 40 years ago. He founded the firm, the Willeford Group, that Kate now owns and has expanded. He is still the president of Dental Retirement Strategies, a registered investment advisory, retirement planning, and transition consulting firm. Rick is the founding president of the Academy of Dental CPAs, an association of 25 firms that provide specialized services to 8,000 dentists nationwide. Unlike most CPAs, Rick also has an electrical engineering degree from Georgia Tech. He has dusted that off and created Dentometrics. This is a specialized program that extracts data from dental practice computers. It produces elegant dashboards to help understand and manage the operational side of the practice better. Well, welcome, Rick. How are you doing this evening?
Doing great, Nancy. Thanks a bunch. I'm ready to get started.
Let's get ready.
All right.
Go.
Well, all right, guys. All right, get ready for takeoff. Fasten your seat belts and make sure your head is in the upright position. We've got a long way to go and a short time to get there. As Nancy said, feel free to type in some questions as we go. And I know what you always tell your seminar attendees, there's no such thing as a stupid question, but they are the easiest ones to answer. So don't hesitate to jump in, or certainly shoot me an email later on, and I'll have some materials to send you later on if you're interested. This can be a game changer for you guys tonight. Whether you're an experienced QuickBooks jockey, I think I'm going to have some surprises and some insights for you. Or if you're a newbie, maybe from the clinical side, or just really never cared much for numbers, I want to expand your thinking some and significantly simplify what the financial side is all about. You don't have to be a CPA. So let's jump right in. What we're going to talk about tonight will be cash flow versus profit, and what that's all about. How come the accountant's P&L they send us just doesn't seem all that helpful to run the practice, whether you're a sophisticated practice administrator or an outside practice management consultant. The P&L was designed, remember, for the CPA to do an income tax return, not to be a practice management tool directly. And so we're going to look at that and understand why, and give you guys some peace of mind if you've always been puzzled how to read a P&L. As the label of the program says, you don't need no stinking P&L unless you really want to drill down into some details later on and manage by exception if something really smells out of whack. I'm going to show you a financial flash report, something you could create, and I'm happy to send you a free picture that I'll show you tonight where you could actually design your own Excel spreadsheet, and I'll be happy to help you with that, to create this cash flow if you want to. Well, cash flow versus profit is one issue, but then just the ungainliness and difficulty in reading an awful lot of P&Ls out there, profit and loss statement, your income and expenses. So I want to give you some ideas about that, and also offer to send you a sample layout you might consider using. Many of you already have your own that you're in love with, and that's fine. There's no one way. There's nothing right or wrong, but I can tell you some principles tonight that would make your life a lot easier. So let's jump in here. This is what the doctor thinks about his practice. Leaking cash everywhere. Never has enough money, doesn't know where it went. His CPA can't tell him. The consultant may have a pile of paperwork that's useless, so they can't tell him an awful lot either. So after tonight, I think you ought to be able to be the hero. Identify some of these profit leaks. Patch these things up. And again, I'm always available to help because I find myself becoming more and more, if you will, a consultant to consultants. And I enjoy doing that. So please keep your cards and letters coming. So the big picture really is kind of simple when you look at a practice. Up top, we have collections, checks, cash, credit cards, etc. And we draw that money out and then pay operating expenses, staff, supplies, rent, etc. And then whatever's left over goes to the green bucket, and that's the doctor, and that would be net income and profit. If that was all there was to it, we could all close up and go home tonight. So what's wrong with this simple picture? Collections minus overhead should equal the green, doctor's wages, and any profit, and what we would say is how much the doctor's stealing from himself. Automobile, travel, family on the payroll, etc. Got no problem with that as a CPA. And they should fire their CPA if they aren't very creative in that area. But don't insult the practice administrator / consultant and try to call some of that overhead, and we'll see about that in a few minutes. So here's what messes things up, the IRS. The IRS gives us a deduction for something called depreciation. When they buy the equipment and they can't write it off or deduct it in the first year, and maybe have to spread that deduction out for 5 or 10 years, that type of thing. So that's kind of an artificial paper deduction. And the truth is, that leaves us with accounting profit or paper profit. That's what the P&L says that the CPA gets so excited about. That's what he's trying to manage to keep the doctor's taxes lower. But every place I go and I ask a room full of administrators, when's the last time you wrote a check to depreciation? Well, nobody did, of course. That's kind of a fictitious item. Voodoo, if you will. Depreciation, amortization. I mean, it's real. You did buy something. It's going to last a long time. But the IRS forces you to recognize that deduction over a number of years sometimes. But that all of a sudden messes up our nice little diagram here. Now all of a sudden, this accounting paper profit may not equal the money in the bank because I got a deduction for depreciation I did not write a check for. Frankly, we all love depreciation, getting a free deduction. But it messes us up as far as managing the practice. And so what I'm suggesting is, let's get rid of this depreciation as an item and think, what does the doctor also write a huge check for that the accountant doesn't give him credit for? And that would be loan payments. The loan payments are not a tax deduction. The interest is, but not the repayment of the loan. The IRS doesn't care about your repaying the loan as a deductible item, and so the CPA's P&L doesn't, but you very much care. That was a huge $5,000 check you wrote last National Bank each month. What's going on here? So what we're suggesting is, let's throw out that voodoo depreciation. Let's substitute loan payments. And that would look like a financial statement like this. We start with collections. We subtract our real operating expenses. We subtract our loan payments. And what's left would be for the doctor. Profits, fringe benefits, insurance, BMW, whatever. But then we would call it technically not net income / profit, but that's net cash flow. How much money is left over in the checkbook at the end of each month? Before we get to the doctor, and here's an important point, I want to know what was the net operating cash flow, after all the real expenses and the loan payments, before the doctor gets his hands on any of it, what was the net operating cash flow before the doctor? This way we can compare across practices. One doctor may decide to put a BMW in the corporation. One other doctor may walk to work. Another doctor may have a Yugo. Well, those games mess up the, quote, profit of the practice, but none of those would impact net operating cash flow, where we can compare real hardcore expenses amongst practices. So I'm going to suggest let's ignore the doctor's share. As a consultant, it's not really part of your engagement typically to wonder where'd the money go. It's just your job to generate net operating cash flow. And let's see how that could be presented. Here's a way, and here's the picture I'd be happy to send you. I call it a financial flash report. You could build this into a spreadsheet, but let me show you what you've got here. In fact, I'm blocking some of my view. There we go. So over here to the right, I'm saying, why don't we put in our year-to-date overhead by dollars? Here's the goal. Here's this year, and probably be fun to show the prior year. Or overhead by percent. Both of these numbers are important, actual dollars and percent. So here's your mythical 65%, say, overhead, if you're including debt service, the loan payment that you normally aren't thinking of. So whatever you decide for your practice, we could then track this. So what are the categories these colors represent? Here are the major cash flow items in overhead. All the team compensation, including the hygienist. This includes their payroll taxes, their matching payroll taxes, their workers' comp, their fringe benefits, everything except the retirement plan. So everything goes in there in the team area. And as you know, if you are into this at all and you manually have to calculate this every month, they may have those items scattered all over their profit and loss statement, and you've got to manually sit down and pull those together, and we'll take a look at that in a little bit. Another category is supplies and labs. Lump those together. Now again, I know each of you, if you're really into the numbers, says, oh no, Rick, I want to have the doctor supply account, I want to have hygiene supply account, I want to have a CIREC account, I want to have fixed lab, I want removable lab. So you can get ad nauseum into the details, but remember, this is really a 50,000-foot view. I'm saying lump all the supplies and lab together. You may decide that combined item might be some number, 12, 14% of your overhead. As long as you're hitting around 13 or 14%, you do not need to waste your time and dig deeper. Manage by exception. If you think 14% is the right number and it shoots up to 19%, then yes, go dig into that P&L statement, into those various categories, see what's going on. And of course, with an early client, you'll probably discover they've got repairs in their supplies. Shine sends them one bill, or you've got 10 hand pieces in there, or whatever. So you may have some garbage in, garbage out. But for our purposes, supplies and lab together, 12, 13, 14%, whatever it is for your practice. If you're hitting in that area, don't look any further. Other major categories: facility, that'd be your rent, your security, your utilities, yard, etc. And I've got all these listed out for you. Administrative, that's your miscellaneous accounting, that's your advertising, that's your bank charges, computer support, that type of thing. And then here comes the note payment, as though it was an expenditure, an expense category. This is where a CPA throws up and says, wait a minute, you can't do that. That's not an expense category. And we'd say, go away, CPA. My doctor writes a big check for note payments. I want to include that because our objective is to come up with cash flow. Here up top, we're looking for major overhead and operating cash flow before the doctor and before profit. And so you could drop those 5 numbers into your spreadsheet every month, and it would look like this if you designed your chart accordingly. Here's all those various categories, and then the green is what's left over. That's all the mystery money for the doctor. So if you're over here and you said 65% overhead was your goal, he's actually up around 68% or so, and you say, doctor, that's really quite good. That's close enough. You had some major expenditures. You had that big marketing budget item you did. So, doctor, I'd say your practice is hitting on all cylinders. You're doing fantastically. The practice is generating the cash you need. Doctor, have a nice day. Of course, what are the next words out of the doctor's mouth? But I don't have any money. Oh, well, now that's a different problem, doctor. My consulting engagement was to get your overhead under control. I mean real overhead, doctor. And I did that. We look great here. Look at all the green I generated for you. Now, it's beyond my engagement, and for some of you it may not be, especially if you're a dental CPA or whatever. You can't pass the buck like that. But you could say, doctor, I generated you all this cash flow. It's not really in my purview to figure out what you did with that money. A couple of things come to mind. I remember you told me you were all excited a couple of years ago when you bought that new BMW out in the driveway. And you told me that the CPA was going to let you put that in the corporation and take a tax deduction for it. Fantastic. I'm proud of him. Also, I think you told me that your CPA had a crazy idea and had you put 3 children on the payroll as employees. Fantastic. But don't even think about calling that staff overhead. No, that's not major overhead. That's what we would call, and what it will be in the layout I provide you, a, quote, budgeted expense. That's our code word for where we put all those expenses that are discretionary. As I said, that's where the doctor is stealing money from himself. And doctor, I think I heard you say that you couldn't find a good CPR certification course around town. You weren't about to go to that nasty Holiday Inn downtown and get your annual certification, but you happened to find a perfect course in Maui. And that's where you went to get your annual CPR certification, and you snookered your CPA into calling that a business trip. Fantastic, doctor. I'm proud of you. See, doctor, we really do want you to be able to talk out of both sides of your mouth, depending upon the definition of overhead. We want you to be able to tell your banker, Mr. Banker, I'm hitting on all cylinders. I'm doing great. My overhead is at 63%. Fantastic. But then you go talk to the IRS, you say, oh my golly, I'm not sure we're going to make it another year. My overhead is 92%. I can barely make a living. And both those numbers are correct, depending upon how you define overhead. So we're going to define overhead with these major categories down here. And these are the numbers you'll see in Dental Economics and Blair's report and others when we start to look for national benchmarks. They're oftentimes broken down this way. And that's one reason I choose these categories. Also, doctor, I think you put a lot of money into a retirement plan, as I understand. And beyond that, doctor, I'd suggest talk to a spouse of doctor, or as a last resort, doctor, look in the mirror. So all those might go to explain where the green went. But again, that's not the consultant's job to have to worry about that. And frankly, it's those kinds of voodoo items they're trying to run through their QuickBooks, that's what causes all the mess when they try to run that trip to Hawaii through continuing education. As many of you know, if you're doing a practice transition valuation or a broker was involved, one of the first things they'll do is try to find all those areas where the doctor is stealing from himself and adjust that out of the overhead. Say, no, that's not really overhead, doctor. The new buyer wouldn't have to pay that kind of expense necessarily. I just want to see the real hardcore overhead. And so that's where the battle always ensues, to have these add backs where they can add back to the so-called pay for profit and increase that profit to increase the value and expose some of these areas where you're doing some creative bookkeeping. So this is the same kind of overhead that a practice broker or transition consultant would come up with, the real hardcore values or for the expenses. And this is what I want you to be able to do, and I'm going to show you a way to get to these numbers in a while. But to me, if you could show the doctor this kind of information, which is very easy for you to get, I think you've probably given him 90% of what he needs, show me the money, with 10% of the work. This doesn't have to be precise enough to do a tax return or balance a checkbook. We're just trying to get pretty close on the major categories. How easy is it to mess up coding rent? Even the doctor probably wouldn't screw that up. Or payroll, or whatever. All these hardcore items, telephones, pretty straightforward. It's all these gray areas where his green goes to. But this will be eye-opening to the doctor and get you and the practice administrator off the hot seat. It's not y'all's fault that the doctor has no money. It was that $75,000 hunting trip he took to Africa. Those kinds of things that are eating you alive. Also in here, I would suggest drop in another number. Down here, I'm saying, give me the hygiene gross wages. You already know the hygiene production. So why can't we do a simple little diagram down here, and I show you that mythical 3-to-1 ratio is the hygienist producing 3 times their pay. Nobody seems to track it that much, but it's pretty straightforward as a consultant since you have access to that information. If they have a payroll service, Paychecks or something like that, ADP, all those companies, including their CPA, if the CPA does it, they will allow the doctor to set up departments in the payroll system. So they have all the clinical wages and all the administrative wages, all the doctor's wages, and perhaps all the hygiene wages. Have a separate department for hygiene. On the 27th of the month, when they write that last check, the next day, the payroll company generally sends a report to the doctor each time they finish writing paychecks. Right there, shazam, boom, you've got the single number you need for hygiene gross wages for the month. You don't have to wait 3 months for the doctor's brother-in-law CPA to, quote, do the books for you to have this information. You've got their QuickBooks, get a raw copy of their QuickBooks. Again, the CPA will play with it to clean it up some, make some tax adjustments, etc. But I'll bet you your hardcore team compensation, supplies, facility, all those are going to be pretty accurate. So you could take those straight from the QuickBooks, I'll show you how, along with that hygiene wages, and come up with some information down here that's fascinating and very easy for you to get. We'll do another conversation with Nancy about how to unlock the secrets in your numbers and dig into this even more and talk about how do we generate a break-even number. It may not be as simple as you think because you've got fixed and variable expenses at work. And when we say break-even, we suggest you also look at the doctor's personal break-even. How much does he need to take home minimum to pay his mortgage, his car payment, or whatever? That number, I would add that to the practice. So then it's fun to have a conversation with the staff at the next meeting saying, guys, I did some financial analysis here, and I realize we don't make a profit in this practice until 3:30 in the afternoon. And of course, the staff will fall out of their chair, and they can't believe that. They just saw this big $10,000 case go by, et cetera, et cetera. I mean, they're not stupid. They know what the revenues are. They have no idea what your overhead is. And I've had doctors purposely walk up and down the hall and moan and groan when that big $5,000 note payment is due, and let it slip to the crew that you've got this big check to write, and that'll kind of put their eyes back in their head. And of course, many of your practices are more enlightened these days, and they choose to share the entire P&L with the staff. They could at least share these hardcore expenses that may be none of the staff's business where the green goes, but can talk about the real overhead that everybody in the office can control and should be working on. Okay? So, if you'd like, I'll send you a copy of this that you could turn into your own Excel spreadsheet and create some neat stuff like this for you. All right, so let's look at the P&L itself. A typical profit and loss statement in QuickBooks, say, out of the box, unfortunately, looks like this, and this may, in fact, be a lot cleaner than some of the stuff that you see. What they're starting with is fees collected, because that's what the IRS wants to know. That's what he pays income tax potentially on. Starts there, minus expenses. They don't care about production. They care about collections. And then the expenses are nicely aligned alphabetically. We had a client come in one time, or I should say a prospective client, says, Rick, I've got a problem. I haven't paid any taxes to speak of all year, and I'm not sure how much trouble I'm in. And I said, well, looking at this, according to you, your profit's only $2,600, so maybe we're okay, that you don't have a big tax problem. I was thinking to myself, that's a pretty poor practice, though. If he only has $2,600 in profit, how is he making a living out of this? And so there's not much useful information here for us to work with. So I suggest instead that you have a QuickBooks layout that looks more like this. This is conceptual here. We'll dig down a little deeper in a moment. But the big picture, I'd say let's go for a categorized management format rather than an IRS tax return format. First thing I want to do is have fees charged up here. And we'll see about that some more in a little bit. And then have fees collected. Then I want those same operating expenses, those subtotals I showed you, personnel, production, facility, etc. And then have this line item called net income before other. And the other is things like an associate, depreciation, since you're stuck with that from the CPA. But then come up with net income before the doctor, and then show all his fringe benefits and his money. But the big thing, and what the word categorize means, is don't allow them to have all these expenses in alphabetical order. I want you to have all the personnel expenses together as a subtotal, all the production, supplies, lab together. So then you have these numbers at your fingertips at the end of the month, again, before you have to worry about a CPA or his brother-in-law, quote, doing the books. You've already got your numbers, drop them into your fancy spreadsheet, and you're off to the races for a very impressive looking financial flash report. But let's drill a little deeper down to show you what a couple of pages of this would look like. And again, we'll get together another time with Nancy and go through the entire financial statement and show you how to dissect that. But to kind of whet your appetite, here's what the details would look like on the first page. This might be 5 pages long, say. First of all, we got fees charged up here. Memo means that we're not stupid enough to add this 700,000 into all his other numbers. Says no, this is just here's a footnote almost. It's here for information, but we're not going to use that to calculate his net income because the IRS doesn't care. But look what we have all of a sudden. I said, let's at least break out the fees charged, production by doctor and hygienist, maybe even doctor owner, doctor associate. But item A, we can quickly see what percent of the gross is hygiene, 18.9%. You may have had 25%, 30%, some number in mind. But right here on this cash flow profit and loss, you have that information broken down for you. And here's a whole other conversation we'll have when we do the Unlock the Secrets. We'll talk about this some more right now. And that is, if you're going to compare your doctor's overhead to national benchmarks, then many of you are calculating the overhead wrong. Roger Levin, I can't remember whether it's Levin or Levin every time I use his name, but at a dental economics conference a number of months back in Charlotte, announced that he now sees dental supplies as something like 9.2%. I, to myself, immediately, in my mind, when I heard about this, waved the BS flag. Says, wait a minute, Roger. No. Remember when we did the dental economics surveys analysis, 20 years ago, dental supplies were, let's say, around 6%. Well, dental supplies are still around 6% if you measure it right. 20 years ago, fee-for-service was the norm, and so production and collections, for all practical purposes, were about the same, 98% collection ratio, right? Nowadays, you may have two practices in the same building that are both collecting $1 million. One of the practices has 6% dental supplies for overhead. The other guy has Roger's number of 9.2%, and he's going berserk. He's always in a foul mood. He's angry. Shine and Patterson and Benko and the boys are all taking advantage of him and charging him too much, yada, 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 because he remembers from dental school or whatever, 6% was the number. I said, well, let's look a little deeper. The Dr. A, who in fact has 6% dental supplies, to collect his $1 million, he only has to produce $1 million. Why? Because he's the old-fashioned fee-for-service. Dr. B, with dental supplies at 9.2%, yes, he collects $1 million, and that's what you see on the CPA's financial statement, and it's convenient and handy because it's available. But behind the scenes, as you dig in further, you know that to collect $1 million, the second doctor had to produce $1.5 million before his stinking PPO write-offs to collect $1 million. If you took his dental supply expense and divided by 1.5 million, that is his standard UCR gross production, he'd be right at 6%. And so that's why production is handy to have here to measure your overhead, especially if you plan to look at national benchmarks. Now, you may only do that a couple of times a year to see how you're doing, because frankly, it's easier and your CPA is probably already providing the overhead calculated based on collections, because that's what the IRS wants to see. But it may be that you will budget for that doctor 9.2% for dental supplies and tell him relax. That is the proper number for your practice. based upon how much exposure you have to participation in PPO plans, and because how we're mathematically calculating that based on collections and not production. So you might have an overhead of 85%, and that be okay because of the way you're measuring it compared to the mythical 65 or 60% that you're shooting for if you base it on production. And so if you want to discuss that some more and argue some more with me about that, we can do that too. But at least you have your fees charged there. Here's your net fees collected, that magical 98%. But we got some other stuff going on here too. Notice down below, under personnel, I have several flavors of wages. Don't just lump it all together. Wages I do not have here would be associate and certainly the doctor. They're not the team. The associate is kind of in a gray area. You could argue almost that's part of the doctor's profit. The doctor used to make $500,000 a year, and he did all the production. He decided he'd rather slow down and turn over some production to an associate that he pays $200,000 a year, and the host doctor only takes home $300,000 now, but he doesn't do his work as much. And so the associate should never be in the personnel area. However, we'd like those departments to break down, hygiene, business, and clinical. And I know some of you would have this broken down into 20 categories of bonuses for hygienists, bonuses for business, et cetera, fringe benefits, all that kind of stuff, which is fine. But all I really need to know is the grand total number like this. Because look what this tells us. First of all, we see our adjustments here. We have production adjustments, and we have true collection adjustments. Just about everybody has this wrong because out of the box, for some reason, especially in the Dentrix world, years ago, somebody decided every positive adjustment should be called a collection adjustment, and every negative adjustment should be called a production adjustment. Have a nice day. What that means is you've got all kind of weird stuff in that positive column called collection adjustments, and that's what makes your monthly analytical report look so screwball, and why you never pay attention to that collection adjustment figure, because it's garbage. The fact is, we suggest that the offices go into their office setup and move all of those adjustments over to the production type, because it's certainly possible to have positive or negative production adjustments. Move those over there and only leave in collections things that really, really affect cash, such as patient refund, insurance refund, care credit refund, bad check. And that's about it. That's your true collection adjustments, the refunds and returns. Everything else is production adjustments up here. So you can get that straight to get your ratios proper. But now watch this.
Hey, Rick, it's Nancy. Can you hear me?
I sure can.
I just want to interrupt for a moment. Deborah has a question, and I don't know if this is the good time for it, but I noticed that she has a question, and she's asking, would you break down adjustments so you know what you're writing off if you're a PPO, for instance, doctor's courtesies versus insurance adjustment?
Yes, most definitely. And that's where we have what we call a PPO wizard, where we, in fact, distinguish what I'll call manual adjustments, old-fashioned adjustments, creature discounts, friends and family, employee discounts. We always display the top 10 manual adjustments, but then insurance adjustments we break down into either manual adjustments that you make when the EOB shows up at the front door because you posted your UCR standard fee, to the patient ledger. In the old days, you're constantly making huge manual adjustments as the EOBs arrive, and we all used to love that because we could see what the true adjustment was on the PPOs. 3 or 4 or 5 years ago, Dentrix, Eaglesoft, etc., said, tell you what, guys, all is forgiven. Go ahead if you want to and just post the net PPO fee to the patient ledger, because we, Dentrix, Eaglesoft, we're smart enough, we're going to bill Delta your UCR standard fee no matter what you do. So we just saved you a lot of bookkeeping. So a great cheer went up at the front desk and saved a lot of work. The problem is all the consultants were pouting because, wait a minute, there's no more manual adjustment here. We don't know what the true write-off was. And that's where our PPO wizard reverse engineered what Dentrix did say. And even if you post the $700 net PPO check for a crown to a patient, we know your real fee was whatever, $1,000. We're going to rub your nose in that difference and essentially post that adjustment for you and display that. So yes, we're very much into analyzing adjustments, manual typical adjustments, employee discounts, etc., preacher discounts, versus the whole PPO situation. That answer the question you had in mind?
Well, I hope so, Deb. Type something in if we didn't answer the question.
I think I put her to sleep. Too much information. She knew all that anyway. She was just checking on me. So I'll move along until you have a follow-up you want to type into Miss Nancy there. So look what we got here. I snuck up on you and had you give me the hygiene wages down here. And remember up here, I had you stick in the hygiene production. Look at the magic you have right here. Son of a gun. She's almost producing 3 times her $49,000 gross. And that information is sitting right there for you if you take a little bit of trouble and put this other information in there. So I think that alone is worth the price of admission. You get that kind of a double check there. Down here, we want to, again, pick up total personnel expenses. Here's your taxes, your insurance, your workers' comp, fringe benefits, all that kind of stuff, because that's the real number of how much it costs you to have an employee. So sometime we get together and do the unlock the secrets in your numbers. I'll go through all the other 3 or 4 pages to show you how there's some neat information hiding in your system there. And Nancy, we actually finished a little early.
Oh.
That's all I wanted to cover this evening, but certainly could open the floor to questions, comments, or complaints, or suggestions, or whatever. So let's see if anybody's still awake.
Okay. And Rick, do you have a handout that you're sending?
I can send a handout. I can get it to you, and then all the attendees would get it automatically.
Great.
Nancy and I, and we'll figure out how to get that to you. And also, if you have some questions and want more details about reorganizing QuickBooks, if you can get your client to listen to you, I'd be happy to send you suggested layout like I'm showing you here to make it a true management report instead of just another tax tool.
Okay, I don't see any other questions, Rick.
Well, I guess they get to take the rest of the night off. How about that? All right, guys. I'll see you around, and certainly you have my email on that opening slide there, and Nancy and I'll get in touch with you. Let me know if you have some more questions or comments.
And we'll send a recording, and thank you for attending. Thank you so much. Good night, everyone.
All right. Nancy, you still on?
I am still on, and I think everybody else is still on, unless you ended on your end, Rick.